Hello and welcome to the Future of Finance, Deep Macros podcast. Today I have as my guest Mr. Oki Matsumoto. Oki is the founder and chairman of Monex Securities and Monex Inc., which was the first Japanese online brokerage. Monex also acquired Coincheck, one of Japan's biggest crypto brokerages, and it has also branched out into other ventures, including Japan Catalyst, an investment advisory arm to pursue investment returns through engagement with listed companies and to stimulate Japanese capital markets. Oki has also served as an outside director for many Japanese listed companies and also some non-Japanese companies. So he's the perfect person to speak with on our topic today, Japanese capitalism and what's going to happen in the Japanese market in 2024. So Oki, can you tell us a little bit about the term Japanese capitalism, which we heard quite a lot about in 2023?
Well, first of all, thank you very much for having me on your podcast. Japan, it's a third largest economy in the world and the second largest capital markets in the world. And people talk about the Japanese capitalism or Japanese capital markets. They tend to talk that Japanese capital markets are not so good. But the reality is, I have to say, I've been in this business for nearly close to 40 years. I've been seeing many capital markets over the world, and Japanese capital markets by far the second best in the world, just next to the States. But compared to any other countries, Japan is the best, just next to the USA. So Japanese capital markets are very, as for regulations, the corporate governance, fiduciary duty, everything is very similarly crafted as the United States. Everything is very similar. Everything is very similar, very rigid, lots of legal infrastructures, blah, blah, blah. Okay, but only one thing which is different from the States is the recognition of the rights of the minority shareholders is still not in the USA level. So that makes the capital markets, somehow different, very different, how it works. So that part is different. But other than that, Japan's capital market is very similar and very well, not only designed, but also very well run.
Okay. Have there been changes to protect minority shareholder rights in the last couple of years? Anything legislatively or from the bureaucracy or companies themselves?
The TSE is have worked on many things to emphasize the importance of the minority shareholders' rights. METI, Ministry of Economy, Trade and Industry, METI issued the official guideline talking about the fair M&As by corporations, and then they very clearly articulated the importance of the rights of the minority shareholders. They talked about the MOM, majority of minority shareholders interests, that kind of concept as well. So there are, and also FSA or the government introduced the corporate governance code, and also fiduciary duty or responsive investment, the concept and all kind of things. So they all talk about the importance of the minority shareholders. So it's changing. It's changing. But I have to say, and I'd like to say, there are still room to go. There's still room to go because, for example, the METI's guideline is not enforceable. Okay, it doesn't come with enforcement. The METI's guideline is very clearly articulating many good things, but it's kind of guideline. It's not enforceable. So that is very interesting. That makes you maybe feel worried, but also that gives us opportunity as well, because from guideline to enforcement, when the Japan moves from this to this, there will be more changes to come to Japanese capital markets. So that creates a lot of opportunity, I think.
And is that so? Is the process, has it been fairly top down from, you mentioned the bureaucracy, the government, or is it more bottom up, let's say, from investors and say management of companies that have made these changes kind of organically?
Well, it started top down, right? So corporate governance reform in Japan started, roughly speaking, like 10 years ago. Okay, so it came from the top, the government or or cabinet. Okay, but the thing is, and many things, the fiduciary duty and everything, many things happened, but things started really changing like last 2 years. This is very interesting. Why that is the case? Because I think the most biggest change happening in Japan now is generation change. Okay, I just turned 60, believe it or not. I started working in 1987 in Salomon Brothers, as you know, and Nikkei peaked at 1989, right? But in 1987, when I joined Salomon, started working, it's Japan as a society or as an economy, already it's beyond the peak, right? So I was always seeing Japan was kind of drifting down because Japan became world #2 economy only 23 years after World War II. At World War II, Japan got completely devastated, and it took only 23 years to become world #2. Okay, and then after like a 1987, 8-ish, right? So my seniors, they had a huge success experience in Showa era in Japan. Okay, so when Japan started kind of drifting down, and everybody said, many people said, Japan need to change. My seniors went like, why? We made a miracle. We had a huge success. Why we need to change? We are better than anybody. Okay, but my generation and younger, we had a very different, the views. We've been seeing Japan was kind of drifting down. So we are always, thinking why we don't take in those global standards or the best practices from the world. Okay,
Right.
so we think in that way. But our seniors thought in completely different way. Those people are now out. Now my generation and younger are taking power positions. If it's private sectors, bureaucracy, even TSE, all places, my generation and younger are in the power position, and then we are naturally more open-minded to change. So corporate governance reform and everything started from the top 10 years ago, but it didn't really change the market or corporations. But now corporations are run by younger generation who are more open to change.
Right.
So that's why that like last 2 years, everything started changing.
Right. Okay. So generational change, very important. Let me also ask about equity compensation for these managers, because that has traditionally not been an important feature of Japanese capitalism, let's say, but I think it seems to be increasing. Do you think that that's an essential feature to incentivize management? And what do you think about the role of equity compensation for managers in this new form of capitalism?
Japanese are also human being. And, of course,
I think that's uncontroversial.
we love money, of course. I mean, it's better to have more money, right? So the equity compensation, those things for management, it does work, but not as much as it works in the States. Okay, so Japan, I believe you appreciate Japan is a very high context country. Okay, it's not only money, it's not only today's something. It's got very long historical things, and the value of me is based on what I know, what I did, what I'm doing, as well as what I'm making. So, but it's very high context, right? So it's a little bit different from the States. Okay, so when we talk about the incentive to the management, the equity incentive is one, but not the one. It's one of many things, but still it's one. So introducing more equity incentive for Japanese management does work, and it's good.
Okay.
But it's not all.
I see. So also let me ask about some of the governance changes that you mentioned. At least to my eyes, many of them look like they're aimed at established companies that have been around for a long time. They have a lot of cash, but low returns. That's kind of the classic quote unquote underperforming Japanese company that people have talked about for a long time. And the idea is to get them to use their assets more productively. But what about new growing companies? Do you think that the changes we've seen are also going to help Japanese companies in Japan grow?
I think it's a kind of next chapter. Okay. One program and big program of Japan is resources are scattered. It's too widely distributed. Like in the States, the top 3 brands of the whatever service or products in the States, top 3 brands probably represent like 50% or more than 50% market share. In Japan, top 3 brands represent maybe 15% market share in Japan. Okay, like a motorbike. Okay, in the world, anywhere you go, the motorbike company exists maybe 0.2 to 1 company per country. 0.1 to 1 maybe. In the States, basically only Harley Davidson, right? In Europe, maybe Ducati and 1 more. In Japan, there are 4. Okay, so like that, it's so scattered. It's the same situation for startups as well. In the growth market in Japan, the TSE, there are many startups listed whose market cap is like $50 million. Many of them. Okay, one company may have good CEO, but not have a good CFO. Other companies, they are around. Okay, so there are so many too small companies, even in the growth area.
Right.
Okay, consolidation should happen. Okay, by doing that, they can gather more resource in one company, and then they can optimally reallocate. Okay, so that has to happen, I believe. So that is going to be the next chapter of the reforming Japanese capital market. But that needs to happen.
I see. So let me ask you, if you went back 25 years ago to the Oki of 25 years ago, when you were just beginning Monex, do you think that it would be a better environment today to do something like that? In other words, because of the governance changes, because of capital market changes, that startups like Monex was in the mid 1990s would have a better time of it now?
It is actually an interesting question. Short answer is yes. But you know what? The tough situation actually creates opportunity. when I started my company 25 years ago, the venture capital not really exist, and everything was very rigid, very tough. So when I started the truly, venture, new brokerage, online brokerage company, it's got lots of attention because no one was doing it. And I did it completely in a venturous way. And again, it got lots of attention, right? So we got success, right? So if everything is very easy, it's not if everything is very easy, well, it's easy for people to start a startup company. Then it's not easy to attract attention from the nationwide audience, right? But of course, in this today's environment, there would be other ways to grow the company or attract the attention. So I think today is better, but I think anytime there are opportunities. So that's why I say when people say Japanese capitalism, it's not good. But I said where it's second best next to the States, and there are room for improvement, and that creates opportunity.
Okay.
Right. So not being perfect creates a opportunity.
Okay. Interesting. Interesting concept. Let me then also ask something on the macro side. Again, I'm an economist, as you know. I think that the macro environment is generally pretty useful, but I mean, the macro environment now is better than it was, say, in the 1990s or the first decade of the 2000s. And it really has attracted a lot of interest, in Japan from foreign investors. And I think that that's part of it. Would you agree with that? Or do you think that the macro environment is still very challenging? Japan has low population, high debt, et cetera, et cetera. How do you think about macro when you're trying to figure out what are the prospects for Japanese companies?
Well, Japan is still the interest rates are pretty much zero. Okay, so this is amazing. When you calculate the real return, if it's a real estate, if it's the corporate public company, interest rate cost is almost zero in Japan, right? So Warren Buffett came to Japan. He issued a 10-year fixed note to finance himself in yen, yielding like point something percent for 10 years. And then boom, bought big chunk of a trading company shares,
Yeah.
whereby dividend yield is like 3% or 4%, whatever. Plus, there's a lots of upside in capital gain, and he makes a lot of money. So real return of Japan is very, very attractive.
Right.
So that's why a lot of foreign investors come to Japan a lot these days. It's really packed.
Yeah.
Because when you calculate the real return,
Yep.
the best. And also, there's no, how do you say, sharp nationalism, like from some other part of the world, like China or India or wherever. There is a kind of nationalism whereby foreign investors have to very carefully play with. But Japan is very much US. If you understand how the things work in the States, things are very similar in Japan, right? And the law is completely clearly articulated. So that's why the entire environment and also this interest rates environment, especially, really help foreign investors to look into Japan, I think.
Well, that does lead me to something I wanted to ask about, which was geopolitical risks. Because I would say last year, well, 2023, I was asked more about geopolitical risk to markets in that year than any previous time in my time in markets. But I think that the typical US investor might have a different view of geopolitical risks than it looks like from Japan. So I just wanted to ask you, you mentioned, the environment in some other countries. What do you think are the major risk factors from the perspective of Japan that foreign investors should think about? We talk a lot about China, Taiwan here, for example. Is this
but, but of course, if China, starts invading, or maybe invading is not the right word.
Gets a little hot, maybe.
Really hot on Taiwan, or try to, try to come closer to Japan, in a military way. It creates risk, but as you know, history tells, by the way, the war doesn't really, push the stock market down. It actually tends to create a demand, and it tends to push up the stock market. And the reality is, for that real kind of a physical contact by China to Taiwan or Japan, it won't happen anytime soon, right? Meanwhile, but this tension is creating a lot of demand. TSMC is building, factories in Japan. Okay, they did two. They're doing two now. They are now in talk to start building number three, which will be 3 nanometer chips.
Right.
So the high end, right? The TSMC is building a factory in the Arizona as well. That's taking forever. I have to say, your government is not really functioning.
Right.
Okay, so TSMC said they are going to build the Arizona, and the US government says, welcome, blah, blah, blah. But there's so many related parties, blah, blah, blah. They have to, deal with, like the pay for the workers, blah, blah, blah. And the factory is not being built. In Japan, in Kumamoto, so quick. It's functioning, okay? So there will be more and more of those, semiconductor chip factories will be built in Japan. Because of tension, as you know, I believe, Japanese government, Kishida cabinet, increased the defense budget by 50%. And the Mitsubishi Heavy Metal, or IHI, those guys are saying there will be more and more production of, military related things by them going forward. So it's already creating lots of demand.
Okay.
Right? So yes, theoretically there is a geopolitical risk, but reality is it is creating more demand. So it is creating more good things than bad things for the market.
Okay, excellent. Okay, so I wanted to also ask a little bit about crypto because through your company Coincheck, you have now exposure to it. And I think that a lot of people in the US don't quite understand this, but Japan's regulatory framework on crypto and, let's say, blockchain more generally is pretty clear. And the attitude of regulators is actually positive toward blockchain as a technology compared to in the US. And I guess I have a simple question of why is that the case? Is there some kind of history why Japan sort of embraced crypto and blockchain faster?
Well, at the beginning, it was, I believe, 2014 or 15, maybe 2015, 16, I forgot. Japan didn't have a clear regulation about the money laundering using tokens. Okay, and so Japan was told by FATF, the FATF of G30, that Japan should create a kind of framework to monitor and regulate and stop money laundering using tokens. So Japan created a law about the tokens. So that happened to become the first legalization of token business in the world. Okay, so it came from completely different angle.
I see.
But Japan became the first nation, at least in OECD, to clearly create a law around blockchain tokens. So, and that created a very, clear playing field for crypto players. It may be it might have been at that time, it might have been regarded as too rigid, but it creates a good foundation. For example, the FTX, okay? FTX gone, but only in Japan. Basically, FTX Japan users, their assets were, protected.
Right.
Because of this, legal infrastructure in Japan. FTX Japan, among FTX, only in Japan, they really needed to, safeguard the customer's asset away from the company's asset. So it was saved. Okay, so such and such. So now the problem is on the crypto is like in the States. It's very, there are CFTC and SEC and Treasury, blah blah blah. It's not clear who is regulating what. Okay, and it's not very foreseeable what is going to happen. Is this business going to be fine, or sometime in the future, DOJ or SEC or someone say this is bad? Okay, so there's some unclearness.
Yeah, I think everybody. I was just going to say, I think everybody who has anything to do with that business in the U.S. really understands it's very unclear, and
Right.
the regulatory battles are part of the reason for that, for sure. So that's an interesting contrast.
Yeah, but in Japan, everything is very clear.
Right. It may not, I think what you're saying is it may not be perfect, but at least it's clear and you know who the regulator of each specific blockchain business is going to be. For example, one element that really the interest globally is booming in real world asset tokenization. And a lot of people are saying that RWA, real world assets, will be the NFTs of 2024. It seems like there have been some really fairly sizable deals in Japan last year involving major companies. What do you think the outlook is? Is the government, it seemed a little bit slow, but it seems that now I believe the Financial Service Agency is the regulator on this side. It looks like it's kind of an open field. Would you agree with that?
Because the politicians are very backing this, Web3 kind of concept. It's very remarkable. LDP politicians, they are really, really supporting in Web3. It's probably because Japan being told by many countries or mainly by the states that, Japan's been slow or not so open-minded or, the behind or blah, blah, blah. So they kind of found that the Web3 area, crypto Web3, may be the area whereby Japan could lead the world. Okay, so they are very supportive. So that influences FSA.
I see.
Okay, that's what's going on. And as you said, the RWA. Actually, yes, lots of transaction not lots of the big size transaction happening in Japan, right? And that may be to some extent replacing the documents from paper to blockchain. Okay, but the government kind of supportive to those ideas.
Yeah. Okay.
So that's good. That's good.
Okay, so I want to go back to the market. We're really right at the turn of the year, and I want you to be the chief equity strategist of Japan. I can't resist asking you, what do you think the Nikkei is going to do this year?
I think it will do very good. Because of those generational change happening in Japan, and the corporate profit is rising. If you check the data, it's really steadily rising. And as I said, the generation is changing, and they tend to be caring more about shareholders' interest. So Nikkei would do better, and also, Japanese stocks are cheap in multiple ways. It's cheap. I think Japanese stock market would do better. As for Nikkei, for example, I think it can go to like a 40,000 yen, close to 40,000 yen. And I think Nikkei would do better than Dow in 24. So there's now Dow is here and the Nikkei is here. But I think by the end of 24, it could go the other way around.
Okay, so back to where we were in your early days at Salomon Brothers in Tokyo, it sounds like. Excellent. So one risk that people talk about, and this will be my final, is about the Bank of Japan. And foreign investors, it's kind of a fever pitch. So I just want a yes or no question or answer. Do you think the bank will raise interest rates in January? Yes or no?
No, no,
March?
no.
April?
Possible.
Okay. June?
Probably yes.
Okay, so basically you think sometime in the second quarter, there's probably going to be the first hike. And I assume that's to 0%, just getting rid of negative rates, or do you think they will actually take it to a positive rate?
Which I don't know, but it has to come from going to zero fast, right? But I think they need to see the wages. So in Japan, but as the Japanese basically fiscal year starts from April, right? So there were lots of wage talk in March, and I believe this 2024, last year 23, many companies raised wages, right? By like in average like 4% or something. 24 again, I believe they will raise by like 5%. Okay, which is in the States, so what? But in Japan, that's like 30 years, no raise. Okay, but 2 years in a row, that makes people's feeling much easier to see the other prices go up, right? And that makes, again, able or easier for BOJ to start changing interest rates. So after April, I think they can move.
Okay, excellent. Well, we'll see how that goes. I hope you're right, both on the market and I also hope the BOJ doesn't raise rates right away. Anyway, Oki, thank you so much for joining us.
Thank you.
The content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained in this material constitutes a solicitation, recommendation, endorsement, or offer by Deep Macro Incorporated or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction. All content is information of a general nature and does not address the circumstances of any particular individual or entity. None of the information constitutes professional and/or financial advice, nor does any of the information constitute a comprehensive or complete statement of the matters discussed or the law relating thereto. There are risks associated with investing. Loss of principal is possible. Some high-risk investments may use leverage, which will accentuate gains and losses. A securities or firm's past investment performance is not a guarantee or predictor of future investment performance.